Welcome to Iron Financial, the place where we help you forge a stronger portfolio and cut right through all the market weakness. Today, we are putting on our hard hats, we're grabbing our clipboards, and we are running a full-blown structural analysis on AMD. Now, this company is an absolute titan, right? It's a name on every single AI investor's lips, and its stock has built a valuation that practically scrapes the sky. But here's the thing about skyscrapers. They all need a solid foundation. So we're here to ask the critical question. Is AMD building a durable trillion-dollar empire that's going to last for decades? Or is this whole thing a spectacular house of cards, just waiting for a strong wind to blow it all over? Let's get to work. All right, let's open up the blueprint. Let's look at the grand vision that AMD is selling to Wall Street and to the world. And just take a look at these numbers. They're not just aiming for a little bit of growth, they are aiming for complete and utter domination. The total addressable market, the TAM, which is the entire potential market they're going after, for their data center segment alone is projected to be around $200 billion in 2025. But look at where it goes. It explodes to over $1 trillion by 2030. You heard that right. That's a compound annual growth rate of over 40%. To be perfectly clear, this isn't a plan to just add a new floor to an existing building. They are laying the foundation for an entire city. This is the story. This is the grand narrative that has the market completely captivated. Whoa, hold on a minute. A beautiful blueprint is one thing, but I've seen plenty of architectural drawings for projects that looked amazing on paper and then just collapsed under their own weight. That trillion-dollar number is intoxicating, I get it, but it's also a forecast that's years and years away. Before we all get mesmerized by the incredible view from the penthouse suite, I think we need to go down a few floors. Actually, let's go all the way down to the bedrock. We need to conduct a full structural inspection. Is this hype real, or is it just that, hype? Do the numbers today actually support this level of ambition? That's what our viewers need to know. You're exactly right, and that is precisely our mission today. We're going to inspect every single beam, every rivet of AMD's financial architecture. We're going deep. We're looking at revenue, we're looking at profits, we're looking at the balance sheet, absolutely everything. Our goal here is to determine if this is a sound structure for you to invest your capital in, or if there are some hidden cracks in that foundation that you absolutely need to be aware of. This is the ultimate stress test. So let's start with the official narrative, right from the architect-in-chief herself, CEO Dr. Lisa Su. Following their full year 2025 results, she called it a defining year. Record revenue, record earnings. I mean, she is painting a picture of absolutely flawless execution and incredibly powerful momentum as they head into 2026. This, right here, is the bull case in a nutshell. This is the story that has propelled this stock to incredible heights. They're basically broadcasting to the market, we are building, we are executing, and our momentum is undeniable. Now, what's really fascinating about this slide here is how it reveals the very core of that strategy. You see, you can't build a skyscraper on a weak pillar. And for AMD, the central, primary, load-bearing pillar is the data center. Right now, it's a little over half of their business, but just look at the projection for the next 3 to 5 years. They expect it to become over 60% of their total revenue. Everything, AI, their EPYC CPUs, their Instinct GPUs, it all flows through this one single segment. This is the part of the business that's doing all of the heavy lifting for that trillion-dollar ambition. So make no mistake about it, the entire skyscraper stands or falls on the strength of this one pillar. All right, I've heard enough of the projections and the CEO quotes. Talk is cheap. Let's see the steel. A building's frame is its revenue, right? And if that top-line growth isn't solid, then the whole structure is fundamentally unstable. I want to see the raw numbers. Is this growth actually real? Is it accelerating? And, most importantly, is it sustainable? Let's get in there and inspect the materials. Fair enough. Let's put the hard numbers right on the table. Here are the results from their first quarter 2025 press release. Revenue hit $7.4 billion. Now compare that to the same quarter last year, which was $5.47 billion. That is a 36% year-over-year increase. Let's be clear, that's not a small number. We are talking about massive top-line acceleration. That isn't rust or corrosion, that is freshly forged, high-tensile steel. For a company of this size, a 36% growth rate isn't just good, it's the sound of a powerful structural frame being bolted into place at incredible speed. And this isn't just some one-quarter fluke. What this projection from their own financial analyst day shows us is that the 36% growth we just witnessed in Q1 isn't some anomaly. It's the plan. They are building this quarter by quarter, year by year. The financial momentum isn't just present. According to their own projections, it is actively accelerating. Okay, acceleration is great, I get it. But a strong frame needs to be strong everywhere, not just in one spot. So let's drill down here. Where is this 36% growth actually coming from? Well, the Q1 report tells us the data center is firing on all cylinders. EPY CPUs, Instinct GPUs, that's the whole AI story right there. And yeah, the client and gaming segment is also doing well thanks to their new Ryzen processors. But look closer. It is not all good news. Semi-custom revenue, that's down. The embedded segment, also down. So what you've got is a main pillar that is incredibly strong, but some of the supporting beams are clearly showing signs of stress. That is a potential vulnerability. What happens if that data center engine sputters for even a single quarter? And this brings me to my biggest concern. There's an old saying, revenue is vanity, profit is sanity. That top-line growth is impressive, I'll give you that, but it's completely worthless if the foundation of profit is weak, or even worse, if it's built on financial sand. So let's move from the frame down to the foundation and inspect the profitability. And this is where things get a little complicated. We need to talk about GAAP versus non-GAAP accounting. You're right to bring this up. It is an absolutely crucial point. So on the screen, we have the full year 2025 numbers. Now, according to GAAP, that's generally accepted accounting principles, the official audited standard, AMD's operating margin was 11%.
11%? But hang on. The number they splash all over their press releases and their investor presentations, the non-GAAP number, is double that. It's 22%. This is the part that always gets me. How can the profit margin just magically double? It honestly feels like they're keeping two sets of books, one for the SEC and then a much prettier one for investors. So what exactly are they hiding in the gap between those two numbers?
Okay, let's break it down, because this is critical for any investor to understand. Non-GAAP isn't technically hiding anything. It's excluding certain items that management argues don't reflect the core ongoing operations of the business. The three big ones for AMD are these. First, you have stock-based compensation. This is a real expense, but it's non-cash. Second, and this is the big one, you have amortization of intangibles. When AMD bought Xilinx, they paid a huge premium for its technology and patents. Accounting rules require them to write down the value of those intangible assets over time. And third, you've got acquisition-related costs, which are the one-time fees for the bankers and the lawyers. The company's argument is that these items distort the true picture of their operational profitability. Okay, I understand the logic, I do, but let's talk about scale. For the full year 2025, that amortization of acquisition-related intangibles wasn't some small number. It was $2.25 billion. They're asking investors to just ignore a $2.25 billion expense. Now, you can argue all day that it's a non-cash charge, but they spent very real capital to acquire those assets in the first place. They're asking you to believe that a $2.25 billion expense simply doesn't count. This is how a foundation that looks solid from a distance can actually be riddled with holes when you get up close. For me, this isn't just a hairline fracture, it's a major structural crack. It is a valid concern, and that's precisely why we have to look at the whole picture. Profitability is the foundation, absolutely, but the balance sheet is the building's seismic bracing. It's what allows the structure to withstand shocks, a market downturn, a new competitive threat, a recession. A company's ability to weather a storm is every bit as important as its ability to grow. So let's test that financial bracing. Let's look at their debt and their cash. And this is where the picture for AMD gets much, much stronger. This data from Morningstar shows the company's financial leverage over time. Look at the net debt to EBITDA ratio. It's negative, which means they actually have more cash than debt. And it's becoming more negative over time, forecasted to hit negative 2.4 by 2029. And look at total debt to EBITDA, it's projected to fall to a negligible 0.1. So the crucial point here is they are actively deleveraging. They are making the entire financial structure fundamentally stronger and more resilient with each passing year. This is what a fortress balance sheet looks like. And to put an even finer point on it, let's look at the hard numbers from the middle of 2025. You're talking nearly $6 billion in cash on hand against just over $3 billion in total debt. That's a net cash position of almost $3 billion. That cash is a massive shock absorber. It allows them to invest heavily in R&D, to make strategic acquisitions, and to navigate any market turbulence without even breaking a sweat. The bracing on this skyscraper is rock solid. A strong fortress is great, but even the strongest walls can be breached by outside forces. That solid balance sheet doesn't exist in a vacuum. Let's move to the external seismic threats, because Morningstar flags some big ones. First off, their overall uncertainty rating for the company is very high. In the AI space, which moves at lightning speed, that matters. Second, competition. Let's not forget who they're up against. Nvidia is a monster, a formidable rival that is not going to just hand over market share in AI. Third, geopolitics. The risk of tariffs or further restrictions on sales into China is very real, and it could just kneecap their growth. And finally, the sheer cost of this war. Morningstar fears AMD will have to keep spending billions and billions on R&D just to keep up, which could prevent those profit margins from ever reaching their lofty targets. The ground underneath this skyscraper is not stable. All right, we have inspected the blueprint. We have checked the revenue frame. We have stress-tested the profit foundation, and we've examined the financial bracing against all those external threats. Now it is time to put it all together.
It's time for the final inspection report. We've weighed all the evidence. So, is this skyscraper a generational investment opportunity, or is it a cleverly disguised trap for unwary investors?
The bull case is clear and powerful. You have explosive, undeniable growth in the single most important market of the next decade, data center and AI. You have a track record of proven execution, consistently taking market share from Intel. You have accelerating revenue momentum and, as we just saw, a fortress balance sheet with more cash than debt. It is a growth machine.
But the bear case is just as compelling. That very high uncertainty rating from Morningstar is a massive red flag. The gap between GAAP and non-GAAP profitability raises serious questions about the quality of their earnings. The competition from Nvidia isn't just a rivalry, it's an existential threat in the AI space. And you have the sword of Damocles hanging over the entire industry in the form of geopolitical risk with China. You ignore these risks at your own peril.
So here is the iron financial verdict. AMD is a structurally impressive growth machine. This is not a house of cards.
But, and this is a critical but, investors must be aware of the cracks in that profit foundation. You have to understand the difference between the GAAP story and the non-GAAP story they want to tell you, and you absolutely must respect the significant external seismic risks that could shake this entire structure to its core.
The verdict is this. The skyscraper is real. It's not a hologram and it's not a house of cards. But it is being built in a seismic zone, and there are legitimate questions about the concrete mix they're using in the foundation.
So the final question for your portfolio isn't whether the building can reach the sky, it's whether you have the stomach to ride the elevator when the ground starts to shake.
That is the decision you have to forge for yourself.